Good morning, traders. This is Rose. Today is June 13th, 3 minutes after 9 a.m. Eastern Time. Hello, John. Hello, Rory. Hello, everybody. Okay. I had a bit of a crisis yesterday in the middle of the third bar, the FOMC bar, which was, where is that bar? Yeah, right here. And I finally, I think I went long, and I was looking for a 1-hour target right here, and then I've lost all of my network. I mean, it was just so abrupt, and I was calling the neighbors, calling a couple of offices that my friends work from in town, and everybody said, doesn't matter, business or residential, or everyone lost power, everything from somehow Verizon got hit, and that's my provider. So it was terrible. And we're calling other people and trying to find out in other neighboring towns. They're saying they've lost. So it's not just the one town, apparently affected many different towns, all the way to this morning, sometime around 2 a.m., 3 a.m., they finally restored it. And right before this happened, for about a couple of hours, I've been having the worst splitting headaches that started from one side of my head, going through to the other side. My neck's hurting. My whole body is literally shaking. I don't know what was going on. I had to go outside, ground myself, took Advil. When this happens, and then inside of my ears were so stuffed and pressure was building. I don't have these things. I don't get migraines, any of that. But when something like this happens, either a major storm coming, so I know that I shouldn't be trading, or something bad is about to happen, and then this happened. I couldn't believe it. And I was in a trade. I had an exit order right here at the 1 hour, and my stop was down here. And I said, either it's going to come down and take out my stop, but normally we should go up because they'll come down enough that here's a leg 1, here's a leg 2, bar 51, and here's is leg 3. Well, we don't know any of this, obviously, so this is what I'm seeing, right, is an inside bar. So, and we're at the support, so this is a trading range. I know buyers are going to buy in. We don't have much space to go up, but it's at least we're going to test the midpoint of this trading range. So I put an exit order, luckily, and I had my stop, and I said, even if it comes down and hits the stop, it's just going to be a certain amount of loss, but not major. So I got it. So I got my target, and I exited. After that, I started posting on Discord through my phone data network, and I told everybody is we might go to these 1.5, which is right in between. And we did. So bar 61 and bar 62 is actually tested that. A lot of people actually maybe bought again about bar 62, but they got trapped one tick above because you have a wedge here. You got a 1, right, is pullback, 2 pullback, and 3. So it's the same bar. 61 is pullback and the third leg, believe it or not. And here is first sell, and the second sell. Bears are waiting underneath 61, although it's not the best sell signal bar, but it is an outside down bar. The body did close on its midpoint, is mid-range, but it is not all that great. So the bulls bought, tried to buy to close, and they trapped the bears selling before closing up. So many bulls entered there. But the problem here is that you have a wedge here, and it's trying to make a double top. So I told everybody, if you do buy here, everybody's looking to get to this target, right? That's 2R, and test these highs, because there are a lot of stops there, so they want to run those stops. But instead, we got this, because this is inside up. A lot of people selling stock they sold higher, and they want to bring market back down. A lot of people sold underneath 61 stock. They're also selling higher. They're trying to break even. So I told everybody, there are 2 things you can do. You can stretch this and buy again, okay, somewhere in the middle, or notice that this bar is your mother bar, okay, bar 55. It's an outside-inside combo, and we are stuck inside with several bars. So what you do is you get your measurement, and I told everybody, everyone is going to buy in several places with the pullback. All the bulls stuck up here. They're going to wait for market to come down to the midpoint of bar 55 or limit buy zone. Either or, they're going to enter and they're going to look for a market to get back up there. And look what happened. I actually put this up on Discord, and I said they're going to buy either the earliest is going to be the midpoint. Now look at bar 63, right? It tested, bounced. That probably gave them a average price exit. Comes back down. This area was never tested again after market going up, but failing to break out. Even the breakout failed. So they're going to buy. When a breakout fails, when you get a solid bull bar close above this bar, you get a breakout. You're automatically expecting is that target to be hit. But that's not happening. Even the pullback, okay, is a problem. No one's buying. But when something like this happens, guaranteed that the bulls are going to re-enter. They're going to buy. So you look at places that never been tested before. That's the 50% pullback and the limit buy, never been tested before. There are buyers waiting to trap these bears, trying to sell and test the 55 low and trying to get a breakout. Once we trap them, we go back up. We finish the objective. That's objective number one. We met. We came back, bought again the pullback, objective number two. If you do not see bull bars closing above, do not expect full reward, okay? Then we come down. You can sell underneath this. Now you are targeting, you can scalp here again, but you're targeting this bar's low, and the market came down. Look at it. This is a failed breakout. These are not breakout. So it's going to probably pull back. Anybody who sold underneath this bar or underneath this bar failed, so they're going to sell the pullback either inside the limit sell, okay, is right at the 50%. Look, 50% rejection comes down, they make money. Now we have a breakout, right? Many bears will sell underneath, but that's their first objective. No bear bars are closing underneath the objective reward line or the target line. And if you get a bull bar, chances are bulls are going to reverse it right back to the midpoint of this bar. And that's what happened. So I followed this along all afternoon. And thanks to Brad Wolf, he just came and thank you, Brad, for that. He jumped in and took over the rest of the day. I'm very grateful for that. But I did follow this by basing my trade on 55's range. Trading is about recognizing what's happening in front of you, whether it's a price action or pattern trading, who's stuck, who's making money, who owns the market, who controls it. So is when you, and also support and resistance, finding that support and resistance. Like for example, if you're a support and resistance trader, right, is right before the news, right? What happened here? Market had two bear bars, right? So here's a failed reversal and is another failed. So failed bearish breakout, failed bullish break. So failure over failure from this trading range is a swing. What do you need? You need two bear bars, right? So if you actually sold with a stop there, you're looking for a measured move. Have you gotten that? Well, let's find out. You put a sell stop. Failure over failure, you're looking for two consecutive bear bars if you want to sell. That's where you take profit and exit out. So therefore, the news came down. It's also a bear flag. I did say market is trying to make a bear flag right before the news, and that's your bear flag. You have to take profit. Now, what about the support? Well, I don't know. There's not much information here for me to say there's support there. The only support that I can base my idea of a support is the trading range lows. I'm looking for a trap there, right? Trading range highs, you have to look for a trap. So that is a trap right there. It's also profit taking measured move or 1R, right? And market reverses right there. So when a news candle reversing like that, it's going to want to go back and probably test these highs because bulls want to take over with 2 bull bars, right? That's also another failure. Many bulls will also buy there, put a stop underneath, right? Is they're targeting initial scalp right there, right? They actually did not get it, but that's I don't do that. I look at it as, okay, bulls will buy and they will probably try to get the 1R. They did get their 1R, but the bears still were selling into 2R, ended up selling again, and I'm going to talk about why they sold here. Okay, many bulls either measure from there, that's their 1R, 1.5, or you can also take the breakout, the close of that bar, or even that bar, right? I didn't take that one. That is the actual, right? So that's how you would measure. That's your 1R. But I'm very conservative, especially with news. I'm going to keep the risk as small as possible, is because I take profit here. If I weren't not able to trade, I would have definitely had a runner here, but is because it's news, I'm going to grab whatever I can because this is resistance. And here's, if you're resistance support resistance trader, right before the news, market had 2 consecutive bear closes, both closed decently, and then you get another leg and another leg. So that means right here from the high of 48 to the entire bar, okay, of 47 is actually a sell zone, is a very strong resistance. This is your first sell. If you sell underneath, you're not going to go too far, okay? You need to see a better sell signal. This is a much better sell signal, but the problem is it's not touching. They sold it anyway. They sold it. It went against a little bit. Then they sold maybe the close underneath. You're able to make money. But then you're selling into this, right? So market made several legs up. So we know the lower third of that bar, buyers are waiting. So you're in a trading range. So you're in a scalp mode and a swing mode. Your swing is not going to work, and that's why it didn't work, all right? But it gave you plenty of points to scalp. So the market now reverses back, but look what's happening here. Another failure of failure is swing, right? So here's a failure maybe, or failure. Here's another failure, right? So I'm looking for, and then they did try to buy. That didn't work, but they're looking for a 1R. So if you were to enter from here, right, I'm looking for bulls to make money. I'm not going to take that low. That's 1R. They got it with 67, even if it came down. But what if you put your stop here, right? If you put your stop here, this pullback would not get you out. But if you put your stop here, which is my rule, right, you would have taken out and you'd be done. But when you have something like this, you can simply just use that. But then you have a 1R right there. So you have to base your profit taking for this. And they did get it. So when the 2 bars, when you enter with 2 bars and you're looking for 1R, 2R, if the stop, right where you're putting your stop, if it's too far away and there's a much better lower low or higher high, use that one. So that's just another rule. But if say this bar 56 was somewhere down here, then I would have used that low. I didn't have to use that. I would get a much better 1R and probably would have met. But anyway, they got it anyway. So even if it pulled back, they got it anyway. So then market reverses back down. So now you're in a trading range. You have another one, right? So you have failed breakout. Here is failed breakout, right? So now what do the bulls do? Same thing. They're looking for 2 consecutive bull closes. Stop underneath that one. Actually, sorry. Stop underneath that one is 75 and 76. And it's pulling back, but we're probably already hitting, let's see, this one already 52.70, 52. The half R is somewhere here. So we have, we came very, very close pre-market. 52.75. That's 1 point close, but job is not done. But they got this target. Now we're gonna open up around 54.42. 54.42 is right around here. So we could actually go up. We're gonna get this target at the open, and then we could continue to go up to the half hour before coming back down, because that would be your trading range highs. So at the open, market is gonna go reach this target, and then it's gonna probably reach there. Everybody is looking for this target, which is 2R. Unfortunately, you're at the top of a trading range. We're probably going to go there and then come back down. If we then find support, we are going to hit that target. So that's what I'm looking for now. But I just need to do this better. Here we go. All right, so let's talk about a little bit is what happened is yesterday. Obviously, it was FOMC, but I want to go through, hold on, monthly. Remember when I started Monday, and even last week, I said that this month is going to reach these trend lines. We might even test above before coming down. If we do come down, we're going to come back and retest this trend line, possibly this trend line even. Just trying to find. So if we break this trend line right here, then we're going to come down to here. But we have to first trap the bulls. So if bull trap has to happen before we come down. So we're on the third leg. So leg 1, pull back, leg 2, pull back, and leg 3. Market could continue to go higher, like 5,600 if it wants to, but we're already maybe 55. Where are we now? Yeah, I'm thinking maybe 5,500, and then we really thoroughly trap everybody there, and then come down. If we break this, then market will try to come down to here. Then you would have some kind of a double top neckline, and we would come down and test April 19. First, the April 19 high, and the April 19 low could be target right around there. But that's monthly. So far, the month, we're in the middle of the month almost. And it's a pretty good bull bar at the moment. Now for the weekly I have targets, so the market is still pushing. I do have an outside bar followed by an inside bar. We have really beautiful inside bull bar, so you can buy with a stop underneath this first inside bull bar. Market is looking for targets. We had a breakout bar, so that's the pullback to the breakout point this week. And market goes and tests the first target and second target, pulls back again to the breakout, and buyers show up again. So you have several different legs here, or you can say leg 1, pullback, leg 2. Some will say, hey, this was the leg 1, this was the pullback, this was the leg 2, this was the second pullback, and we're already in the third leg. I would like to see market reach here. This has always been my target zone. 54.6375. So today we are at 42. 21 points we can actually this morning reach there and then maybe come down. But this is again weekly, so this bar is still progressing. This bar could test there and then come down. Okay. Daily, I do have a measured move target there, but that's just far away. But again, it would be a great place to go and test and then trap everybody and then come down. Yesterday, I wanted market to go and reach this target, but it didn't happen. So it's a doji, but it is a sell signal bar? No, I don't know. It's could be creating an island top. Island tops are reversal signals. So, but that means we have to have some inside bars, maybe coming down and testing here. Then if we start to get bear bars, we're definitely going to come down and test these highs. So because we had the inside, outside, inside, it's a breakout mode, inside, outside, inside. It's also mother bar. And look, is we came down, we trapped the bears. You cannot expect a breakout, any breakout. Bulls will challenge and they're going to trap those bears. You get a beautiful bar closed. You can buy. This is, even Brad said we're probably going to gap up at the open, and we gapped up. So all these targets met, and we're even closed yesterday above this. So market is still trying to reach up here and possibly further more. I don't know how bullish we're going to be, but from the weekly, since we have a target, we could make a 20-21 points maybe before coming down. So that would get us up here again, possibly. So we are at 54.42. But what about the bears? Can we actually start to sell? 54.42 is right here. If we start to sell, okay, then we make a micro double top. Today needs to close bearish to have an island top. And then we need to move underneath this bar. It's not a good sell signal bar, probably buyers in this gap area waiting. So when we pull back to this breakout points, first I'm going to look for buyers there. If we break it with the same bar today, then we're going to come down and test yesterday's low. And that's the last target bulls actually went above. There could be buyers there. If we breach that too, then we could always come all the way down here and then bounce back up again. So today we could actually test, if we cannot go above high, okay, or we can go and test it and then start to come down. We can also test underneath this bar. Okay, so it's a continuation, but some will call this as a morning star. So basically it's a reversal candle, but it's not a bear close. And it closed slightly above its midpoint, even though it's a doji. I'm going to look for market to continue to buy. But if we fail, okay, then I'm going to look for a test the low of this yesterday's low. So we can go up, we can come down. We're going to open up 44.50. We're going to, yeah, market is trying to go here. This is their target, 46.75, prior high, maybe even 2R before we come down. It's possible. We have an expanding triangle. We have an expanding triangle. Trying to see how I can measure this the right way. I'll take that. But then it's not very symmetric, is it? So what I'll do, let's break out. It's not very all that symmetric to begin with. If bulls really want to buy, you can see that this could be where they're heading towards. Yeah, could be that. Right, breakout, comes back down to the apex. Here is apex. It's generally support or resistance. Trying to find something. Yep. Okay, so here we go. It's a really good area. Bears need to start closing bear bars underneath this line. I'm going to make that dash to become bearish and bring market down. Why is this area important? Just trying to. Okay, so yep, that's it. So close the bull bar, stayed above it, came back, retest, breakout, comes back and retest, bounce, second bounce, but it's just bulls are losing momentum. We have 2 consecutive bear bars, but although we did sell a little bit, but we failed. So now we close above it. So it's hovering around. This is a important price now, 54.40, 50. So market could come back here. We're probably already did and bounced. Bulls are trying to get this price. Could go higher. And then we could go test there. If we start to pull back, we could pull back in here. So market could oscillate around this area. But extend this. Okay, which is a trading range. It's just expanding. So we got a lot of trap happen, and we got a trap there because we went slightly above it. So now we are above the 50%. That means market is trying to go and test these highs again. So it's trying to distribute to the upside. But that could change around 53.75. We don't need that. I'll just get rid of it. So it's a clean chart. Is on the hourly. This is last week's trading range. So here is Monday, Tuesday, Wednesday. We gapped up we could come back to last week's high once again if bears do show up. All right, market is on. Just first bar, first hour. You can see that it's kind of an island top, right? So we do think of this as a one big bull bar, right? This gap. So you have leg one pullback, leg two pullback. If we cannot take out those highs, market could come down to the moving average, maybe even pull back all the way to here. I need to adjust the Globex session. So I did buy and traded a little bit. So this is my Globex high. This is a tight trading range, and this is Asia. Okay. We trapped under the Asia. First, we trapped London session is above the Asia. When that happens, expect Asia lows to be tested. Market sold with several legs, and then goes right back up, right? So you have an expanding triangle, but this area is important. If market starts to close bear bars below 36.75, we could come down and test the Globex low, maybe even test, I don't know if it would come down here, to be honest. I think there will be support here. There will be buyers here. Then here's what could happen. If the bears do show up, we move under, we come down, we break, everybody else selling, and then we bounce. Then I would look to sell again. If this area holds as bull, okay, bullish enough, we do not close anything underneath here. Suddenly bulls do show up. I'm going to target here, maybe even higher before coming down. So far, Asia, bull target 1R, tested. And you do not want to see Asia midpoint taken out by bears, because if they do, then we end up coming down to the Asia low and then today's Globex low. So right now, bulls trying to contain the bears there and reverse it back up and get to the Asia 2R, which is right there, and possibly 3R. But are they going to succeed? Well, we'll find out. This is why I don't trade the first couple of bars. I like to see what's going on. Okay. News-wise, we have what do we have? We have a couple of news came out. 8:30. Jobless claims and PPI final demand, which is big news. So we're going to get reaction to that U.S. session open. We do have 20-year bond auction. Pardon, I'm sorry, it's announcement. That's 20-year bond announcement. We don't need to worry about that. What do we have? John Williams, Fed member, will speak at noon. All right, so we have 30-year bond auction. That's the one. That's 1 o'clock. That's going to move the market. So you guys need to pay super, super close attention. 1 p.m. starting noon with Feds. We're going to get a major reaction to that. Okay, so 30-year bond auction is a big deal. 1 p.m. Eastern time. All right, we're right at the. Why aren't we not going there? Well, I don't know. I would prefer this target to met. So I'm going to look to see if we can close this bar above this line. I'm not selling anything. But if we start to close bear bars, then I'm going to look for bulls again, because this is still their target from yesterday, and they kind of couldn't meet that, so they're looking for support most likely. I'm flat at the moment. I don't trade the first couple of bars. Okay, so we have a bear bar closed. We are below high of yesterday. We are above close of yesterday. We're in smack in the middle of this expanding triangle. Can we get a bear trend from open? Bar 2 needs to close bearish. Then I would look for this gap to be closed, is at least to come down to here. But if they cannot close a bear bar with bar 2, we're going to reverse right back up above that blue dash line. Bears trying to close below the mid Asia so they can bring it down to the low of Asia and then come down further. So the close of on the 5-minute close of a bear bar with bar 2, that would seal the deal for bears, and then they could sell. But I don't know. So bar hasn't closed, can't do anything. It's kind of breakout test area here. But you're within a structure and you're in a trading range, and bulls kind of failed there closing this gap. So they're disappointed because they were going for this target. That's the logical thing to do. But now they're disappointed because they couldn't close this gap. At the open, you get these quick reversals. A market could go up a couple of bars and then immediately reverse, or it can come down and then immediately reverse. You get these sharp reversals, two-sided trading, until like 11 o'clock, 10:30, 11. See, upset bulls couldn't get their first target. They're buying, and they're trying to go back to this bull bar's low at least, which is only a couple of ticks below the target anyway. So this is why I don't sell, because they're disappointed. So they're going to buy lower, and they're going to either break even here and exit out, or they close a strong bull bar, they're going to continue to go up. Bulls still giving a fight to keep the market above the key level. Key level is between the two price points, is I mark on the Globex chart. Is we start to close bull bars, we're going to go back up to the prior highs again and into that red zone, possibly even go beyond and above the red zone if we get those bull bars. So you have is markets, look what's happening here. Bears broke it, broke that low, but failed to sell. Now, bulls actually took that lower high. So that means market is now bullish sentiment. So what do you do if there's a gap bar, right? You don't buy right away. We're going to test those highs, but if you do buy, you have to exit, because we're going to come back into this gap and look for buyers. And that's what it did. So now bulls need to close this bar bullish enough or weak bearish to buy above the bar, and then expect these highs to be tested, maybe even these highs. So that's what the bulls want. So that's what the fight is. This is why I didn't want to sell, because this gap bought once, they're trying to buy a second time, but they have to also show me that they're bullish enough to close this bar bullish enough. So if the bears do close bear bars, closing this body gap, then I'd look to sell the pullback into whatever the bear bar created a body gap. I don't see that. There's nothing to sell here. This is a test to buy zone, breakout test. Gap is still open, so it's still bullish in as far as I'm concerned. So the bulls want to take out the bar 1 high and go test the prior highs. First 1 hour is right there, and then you got a bunch of magnets above. there is, no, there's nothing there, sorry. I thought it was a ledge, but it's not. So it's a 2-bar trading range at the moment. Bulls need a good bull close above bar 1 to get a measured move up. Bears are looking for a strong bear close to get a measured move down. I don't know what's going on here. As far as I'm concerned, it's a small trading range. I don't have a good signal here. I'm sitting on my hands. It's resistance. I just found resistance with the Asia 2R. Looking for, because there is so basically what you have here is a trading range, right? So you could take this, clone it, or whatever this distance, and clone it back up or double it. So I'm looking for an area where market is just going. Okay, eventually it's going to either break out or it's going to come down and break down. So otherwise it's going to keep snapping back to this trading range. And that's what's happening. And that makes it very difficult and puts us into a limit order market. We could not get a stop order market because bar 2 didn't close bearish. So that's why I said if it was 2 bear bars, I would have said trend from open and I would look for this gap to be closed. So now we have 2 bars overlapping 99%, right? So that means at the high upper third of this 2-bar trading range, there will be limit sellers. Lower third, there will be limit buyers until we get a breakout bar. I think the trading view in many applications, except Thinkorswim and Ninja, is we haven't really rolled into the new contract. So I'm not ready to do that rollover yet. Plus, my broker hasn't alerted me about the rollover. So bear's trying to sell, but probably test of EMA is doable here. But I want to see a breakout bear bar closing below 36.75. And if the bears do close this gap, okay, then that's good. We can actually come back and test the Globex low. But I don't know yet. So this gap is still open. I didn't buy. Also, I didn't buy 1 tick above 2 because it's a 2-bar trading range and I didn't get my signal here. So there's nothing there. So I'm still sitting on my hands. So now market wants to come and test here. But I don't have a signal. Bears trying to close this body gap, so that means they have to close at and below 33.75, a bear body. Then everybody who's selling is going to get trapped because we have to pull back, and I need to see a bear gap body. Then I would look for that bear gap area to be tested before I sell anything. Then I would look for that bear gap area to be tested before I sell anything. But if you did sell, because you have a micro double top and a bear flag, they might have sold underneath 3. So they're looking for EMA test and then half R and 1R. I don't like to sell into bull gaps because they can trap you. I don't care how it's measured. Gap is a gap. This is a bull gap. They can trap you. I've done nothing there. I have not sold anything. I have not. If you did sell underneath 3, you had maybe scalp there, but there's no bear body. In order for market to come down to the measured move here, this right here, 4, needs to close way underneath, too low, with a strong bear body. Then you could say, okay, this is going to go down here. I don't have that. You're still inside the bull gap. It's very dangerous, okay? So, done nothing there. Not a good buy signal bar 4, but if you do buy above it, then we might go and test the micro double top. Bulls might have both the close of 2, so they're stuck, but it can also come right back down to the 4 high again. It's the second leg down. We didn't test the EMA. We're probably going to get wedge bottom before buyers show up, if they do show up. So I did not buy above bar 4 because it's not a good buy signal bar. If you did, you got stuck there. You see why I'm staying out of this? I'm just gonna let this do its thing, and if it was a good buy signal bar, I would have bought it. But you're smack in the middle of this expanding triangle, therefore it's a trading range. And trying to buy or open any kind of trade in the middle of a trading range is never a good idea anyhow. So, I mean, what am I going to lose for not trading anything? I'm not going to lose anything, but I'm going to gain a lot, right? Sometimes patience is better. To have patience is a better thing. Even though everybody's a click happy. We all want to click on buy, sell, make a couple of points and feel good about ourselves. Oh, we're such great traders. We just made a couple of $100. We must be really good. No, you might be gambling there. So better to just wait a little. There's no signal yet. Bear's still trying to close below 36.75. If they get the bear body, then that's it. They're going to close this body gap, and the market can sell, but it still needs to pull back before selling. So it's just not clear. But if you are selling, and if you sold underneath 3, target is either that half R or the EMA. We might move underneath the EMA to make a wedge bottom and then reverse back up again. Bulls fail to close the gap, so now bears are trying to close the gap. I think the target is around 32.75. See if they can tag it. Could move further down. It's the EMA also. We're trying to tag the EMA. 10 o'clock, machines are programmed to think that there's a 10 o'clock news. So there's about 5 minutes and 10 seconds left. Pre-market, market has been swinging down about 20 points. They haven't really tagged at 19 point, which is 33.75. 20 point is 32.75. For bears, they might actually come down and test it. Bears trying to close the body gap to turn the market into much more bearish sentiment. But when that happens, everybody else sells, and then they get trapped because it needs to pull back into whatever that bear gap is created to sell again. So this bar on the 15-minute chart, higher time frame, is trying to create that bear gap body. If that's the case, that's great, but then you still have to wait for it to be tested before selling. In the meantime, in the smaller time frame, pre-market, market has been selling. They want their 20 point. 20 point is 32.75. I finally sold, and I'm one tick above that. So I'm at 33, and I want to scalp that. But I haven't really didn't test it yet. Okay, I got my target, scalp. One tick above 20 point swing for bears. It could go lower. Doesn't need to stop because it's 10 o'clock almost. But generally, when a 20-point swing is achieved, that side will start to scalp or take profit, and that could bounce a little bit. So you have is leg 1 pullback, leg 2 pullback, with 5 is pullback and start of leg 3. Okay, so the bears achieved something here. They turned the market bearish, okay? But still, this bar needs to close as low as possible. Then we could either continue to come down or we're going to bounce, and I'm somewhere in that gap area. I'm going to look to sell. We're so close to the Globex low, so therefore that is the magnet. Is if we're at the open, if we're closer to each one, whichever we're closer to, that's the one is your target, and we could break out from that. And so that's why market is trying to reach here, but there's 1.5 minutes here. Market could come down further around 54.93, 54, even 92 area. So they are still pushing, but I do expect some kind of a pullback first. But so far so good for bears. That's the pullback I'm talking about. That's why I took profit at 20 point. I expected this. It could still sell. It just needs to test this gap area and keep it open. Then I would look for a rejection, a bear close, and then I would put a sell stop order 1 tick underneath that bar. I don't have that bar just yet. See, that was the pullback, and they're trying to sell. Bear's still trying to sell here. They're trying to close the gap with bar 81 high or the body. With bar 81 high or the body. So the Globex low is still magnet. Some support around 27.25 to 26 area. Small support. It could test and bounce. So you may want to scalp a little bit. 27.25 to 26. It's also slightly above the Globex low. They're trying to get a follow through here, but not all that great because there was a breakout here and the bulls did show up. So probably some buy orders above the Globex high and these wicks. I'm sorry, Globex low and these wicks. So you do have a wedge here. 1 pullback, 2 pullback, 3. So bulls trying to trap the bears under the EMA. They're trying to keep the gap open so they can go right back to the 5, bar 5 highs. But probably sellers above 7 or at the high of 7 or upper third of 7. At the moment, it's an inside bar after the third push down. So bulls trying to reverse the market back up, but probably some sellers above waiting. And it's also 7 minutes after 10. Market is trying to reverse. It's got a wedge here. but there are sellers at the upper third of bar 7, like I said. So it's trying to create some kind of a triangle to continue to sell. But if the bar closes really strong inside bar, we're going to go then test the bar 6 high. So, but sellers there, either 7 high or 6 high, somewhere there waiting. It's a 3 bar is limit order market. So some machines will try to sell the close of this bar 8 inside bar 8, probably. But limit sellers also at the high of 7, possibly even 6. So some machines already trying to sell the close of 8. They want to come back and test the 7 low or 7 close because they're trapped there. So there you go. They sold it. It's a triangle. They're trying to get a breakdown. They're trying to close the gap. So many who sold breaking even already. So this is great. So did I. And yep. So I did sell up there and then had a break even, moved my stop. So it's a risk-free trade now. And if it comes up and takes me out, that's okay. That is no problem as long as I'm trading risk-free. Remember, risk on, risk off. You want to always have risk off. If you can't, then you're trading with wide because you sold underneath 3, your stop is above 1, and you're still swinging down. Then you're looking for a much bigger wedge structure, right? So maybe this is going to be your third leg. So I have a runner right now, and I'm looking for market to come down to 26.50. Remember, I said we could test 54, 54.93, 54.92. Oh, I'm sorry. What am I saying? I'm looking at a different chart. Hold on. That's actually 54. I'm looking for 54, 26.25 and 54, 25.50. Forget what I said. That I was just also looking at TradingView, and I forgot that the contracts. It's kind of changed there. I think they rolled over already. So never mind. All right, so we did come down to 19 point, but we couldn't. It's 18.75. That's 26.75. We didn't really test 26.50. I wanted to see 26.50 test, and we might still get that. In fact, actually, the target is 25.50 for bears. So I did pretty good there. And you can see that is the gap bar retest of the bear gap, and they're selling. So you can also hold this into the Globex low. We are overlapping with bar 81, so gap is technically closed, theoretically closed, but not technically closed, because you need a bear body overlap and not a wick. So you want that bear body to close somewhere at the open of, or 1 tick below the open of bar 81 from yesterday. Then the gap would be closed. Close of yesterday is magnet. I still do think the market is going to test 26.50 and lower before bouncing. There you go. That's 19 plus 1 swing. I like that. So now let's see if we can actually get to 20 plus 25.50. But I've already taken profit, just so you know. There's magnet here, and we became very bearish here, right? We actually moved underneath the apex of this triangle. So can we still go back up? Can we still reverse here? Well, if we start to take this dash line right there with bear bars, these bulls are going to start to defend their stops, which is right here. So from here to here, buyers are waiting, okay? They're going to try to defend it because they were going for this and they failed. So now they don't want their stop to get hit, and it's going to start to bounce. So I took profit there, and rest assured, well, okay, well, not yet assured anything. So 20 point is 25.50. We came down 19.75. So that's a one tick failure, but it's probably going to hit the 25.50. Anything. So 20 point is 25.50. We came down 19.75. So that's a one tick failure, but it's probably going to hit the 25.50. But at this point, I don't care about that one tick. I've already scalped. So you do have now a much stronger third leg down. And it's the biggest bear bar in this trend from, I guess it's a trend from open. It really is not, but it's really large, very strong. Probably wants to get a little bit more follow through. Okay. So I wouldn't exit out just yet, but you should have scalped a little bit and pay yourself. Gap is closed. Market wants to move below the close of yesterday. Market wants to get a breakout from the Globex low. Possible that it can. The target for bears is the 1R Asia breakout. That is 54.23. So market is trying to get to 54.23. We have not gotten a breakout from the Globex low yet, but we could easily do so. But remember, I said, buyers are going to start defending. I would assume we're going to test the 54.23. We're just stalling here because it's a solid 20 point on a 5-minute chart. So market is taking profit here, but we can continue to sell. Just needs to bounce a little. That is the third leg, and got to follow through a little bit. And if we're going to get down here, I would prefer bears to actually tag the 23, but because it's dangerous area and the bulls are ticked off that all this 3 legs come down and they couldn't get their target, so they're going to try to defend here. But we could still get to the 54.23. A bar like this should get follow through. It's just too low to sell, so it has to bounce a little bit and get some limit order sellers. That is the pullback. It's also micro double bottom and a really good open for bulls. But how will the bar close? That's the question. If bulls cannot close that bar on its high, then it's a waste, right? It could still come down to the 54.23, but it is a really good open and a micro double bottom. So it's trying to go back above bar 10 high because that's neckline, and buyers are already wanting above. But look what you're buying into. You're buying into a breakout test. So they want to test the 7 low. 7 low is the breakout test, but they have to close this bar bullish. And if they fail, then we come down here. So they couldn't, they're not doing all that great, so this is still trying to come down. There you go. So, hang on, guys. Getting some. I got filled there, but I was moving around a bunch of orders, and my broker is saying, well, I filled you, stop moving stuff. So, buy the cover. I was trying to have a runner there, and they didn't accept they're like, we're just going to give you your money. And so now it's just giving me all sorts of bunch of pop-ups all over the place. I hate when that happens, so I have to click like a zillion times to close those pop-ups. Sorry. That's called greed, because I didn't adjust my runner properly. And I was contemplating, should I take all profit at 23 or should I have And it was coming down with velocity because a bar like this, 9, should continue to sell. And I made a decision, okay, I'm just going to adjust the runner. And I was trying to pull it down, but it hit my reward target faster than I were able to move anything. And then, of course, I confused the system, and they started to punish me with a bunch of pop-ups. But it's okay. I made money there, and it is what it is. That was the target, but we have exceeded. But we're still in this area that bulls can still show up. But we have a breakout. Bears want continuation into 2R. So if we take out the 75 low, remember I said we would come down. If we cannot continue to go up at the open, we're going to come down and test yesterday's low. So the bears want yesterday's low tested and maybe move underneath. But this is last resort for bulls. They are trying to prevent 75 from yesterday's low to be tested because they have stops there. Probably buyers down here if they're using a white stop. But once I start to see this, and if I'm long, I'm never long, right? You have to exit out because market is moving underneath an important price level, and it probably wants to come down and test these lows. So I finally start to sell and make money. I was never long anyways, but anybody who was long from yesterday wanted that target. So it's no longer relevant. It stopped being relevant right here anyways. We moved underneath the EMA with 2 consecutive closes, 6 and 7. So you have always in short that any kind of bull targets become irrelevant, right? You have to kind of look to sell instead. So I did say if we cannot go higher, then we're definitely coming down and test yesterday's low, and that's what's happening right now. So, but I am flat at the moment. Oh yeah, I mean, look at these, right? That created a micro double top, and I said I'm looking for it was right here. Bears closed that gap, created a gap, so you look for a pullback and you sell. Even if you didn't sell the pullback with a limit order, which was 10 o'clock, so bar 7, that's your pullback. You could have, I said, trail sell stop orders or sell the pullback. You could also sell right here underneath that bar. You'll make money, and your target, first target, you scalp there 1R, second target is 2R Asia. Or you can also look for a measured move. So that's your half R. Market could move down here. What will be the CNBC headline? Rosa's printing money. So join the trade room. You could have sold underneath 9. I said it is a third leg down. Bears close the gap. A bar like this should get follow through. So that right there is really good. Yeah. See, game's not over for bulls. They're still defending 75 low, right? And because they had a target there, they failed, but still, we can reverse back up. So you have, it's not very symmetrical, but could be a truncated wedge. It's also still trading range. They're trying to reverse here. That's because they're stuck. Here's a breakout failure. They both there. They buy again, right? Maybe they want to bring price back up here. Really good reversal bar is also higher low. So these bulls bought above this, I'm sorry, here actually. That's their break even. That's 2 bar. They got a failed. So that's the break even right there. They're gonna probably take profit there, but it could continue to go up because it's a really good reversal bar after leg 1, pullback leg 2, pullback leg 3. So this is where they're trying to test. But if we cannot close a bull bar above this level, it can still come down. So they're trying to close the body above that where I measured earlier. You need to be able to tell when market reverses at a certain area, and I did say that that target is no longer relevant, but still this area is relevant. Why? Because bulls are still trying to defend their stops. So if they buy, maybe they buy the close of that bar lower, you gotta know even the pullback, where is pullback going? Where can it test, get rejected, or where can it test and get follow through continuation? So you have to be able to make sense of who's trapped, why would they buy again, where would they get an average exit, right? So would they get the average exit, or would they keep pushing the price up? How would it push further up, right? So for example, let's see, that is like it could literally go all the way up here if they can reverse it. It's a good bar, but you need another bull bar. So there are buyers buying one tick above 12, buying the close, but it's a tight bear channel. First reversal, right? So it's kind of minor because you're buying against 1, 2, 3. You might need to look for a second entry long. That would be a much better entry. So there will be always sellers. You get 3 bear bars, but really good reversal bar. So if bulls really want to reverse this back up, excuse me, they need the second bull bar here. Then they would buy the next pullback. So let's see. That's kind of a pullback. Second pullback before the third leg down. So I would say market it could reach there. So I'm not ready to buy anything. I'm waiting for the decision. As far as I'm concerned, low of yesterday is still magnet. So it's just, if it wants to go up here to that green line, it needs to give me a much better entry. We have a breakout from Globex low, and then retest of the Globex low is target is still 2R. So on the Globex, low of yesterday's magnet. Trend line, they're trying to break this trend line. I've got another magnet, which is 1 hour EMA, which is right there. We could still sell. Market is trying to probably come down to 54.13. Also 14. Like to see this area tested and then bounce maybe. So anybody bought above 12 is trapped, right? So that's not good for them. That's why you don't buy the first bull bar you see. Pin bars can be misleading. There are a lot of write-ups about pin bars. There's a whole course about pin bars. Somebody is actually selling people course saying that, hey, buy this. That's a great reversal. This is support. Buy that. And then you buy it, and look what happens. Not only you lose the money you spend for that course, and now you're losing, doubling and tripling your losses. So you tell me, that's a good idea trading pin bars. No, it's not. You want to trade with the price action. There's no confirmation. You're buying against a very tight bear channel. First reversal is going to be challenged. So I bought nothing there. As far as I'm concerned, market wants to come down further. If they prove me they can give me a better second entry long, then that's fine. I will take that, because there is the undershoot, overshoot, 1, 2, 3 wedge and a higher low, double bottom higher low. That's fine. I just need that confirmation with a second entry long bull bar. So what's happening here? There's something else happening that could be bulls buying already. But they have to close this bar bullish. Bar 14 closes with a bull buying. Immediately, bulls will buy the close of that bar. So I still need to look for that. I don't have the signal. Otherwise, if 14 closes bearish, buying above that could be dangerous. We could go up to the EMA and then sell from there. That is the second entry loan, but it is reaching a 10-point bounce here. Second entry loan, but it is reaching a 10-point bounce here. Bears want to double top at the EMA. If this bar closes like this, that's a decent bar to buy and expect an EMA test. I don't like to buy or sell while the bar is still progressing. I have to wait, but it is the second entry long, except that it's reached a 10 points, so there will be bulls taking profit with that bar. Okay? But the moment it closes like that, it's going to go higher. I mean, you can still use the pin bars. You can identify them and see the behavior around it and look for a second entry, long or short, right? That's a much better. So they're taking profit there already. That's a 9, almost 10 points, but not necessarily. Could go higher because it's a decent bar. There's still a room. A second entry long, so it wants to go higher before getting a double top. But you see this trend line? I need to see a bull bar closing above this trend line, and then I would look to buy, or maybe go up, come back down, and then go up. This is my target, this green line. But it's never easy breaking some kind of a trend line here. It's basically a channel. First break can be challenged. So like I said, this is 9, 10 point was 27. We tested 26.50. So 2 ticks from a 10-point swing, it's a legit place to take profit. And I said, these bulls are going to take profit there. They're going to scalp because it's a small trading range there, right? So, but if you were to put a buy stop order 1 tick above 14, you would not be affected by this bar 15, right? Because you're waiting to get filled. You're not buying the close of it. So you're safe. So if market wants to go up, it's going to sweep you into the trade 1 tick above 14 rather, and that's why Al says use the stop orders, don't enter with, buy the close market and any of that. So it's safer entry. So basically you're sitting there and waiting. If market takes out the 14 low, then you cancel that because obviously it's not going to go up anytime soon. It could continue to come down here. But I mean, isn't it better to cancel an order that you did not get triggered into when it's going against you rather than canceling an order while in red? So this would make you a lot nervous if you were to buy the close of that bar. From the pivot. So 10 is there. We reached 9.50. Profit taking starts at 9. It's so easy to make a 10-point. Look at the ATR. It's more than 5. So it's making 10 points today is like child's play. It's going to be easy, like a walk in the playground. Now, if we break this trend line, we're definitely going to go up here, or at least the 7 low where we got a breakout with bar 9. But even if we get a rejection, market will continue to soldier on. It could be like this and go. But first, we need to see that trend line break. We still don't have a breakout from that trend line, but anybody who bought the close of this bar didn't wait with a stop order, one tick above, bought again, probably break even. Now, if this bar closes bearish, we could still come down here. But if we get that finally bull close, we're going to go up to 29.75 and there. So the trend line is still holding. Bears trying to take out the 14 low. They're making all the bulls entered nervous. Smart bulls already probably exited with bar 16 upper wick, but now this bar closes bearish. This is the target. So I still need the bullish. If I want to buy into that green line, I still need the bullish signal, like maybe 1 or 2 bars. This is why it's better to wait. This is why pin bars are never reliable. Market is still pushing its way down to the low of yesterday, but needs to close a good bear body. Well, we don't have a bear breakout failure yet. So if it starts to reverse, then you have a failure there, bull breakout, and you would have a failure here. Then you can look for a reversal back up, but that hasn't really set up. Bears still own the market. Remember I said with bar 6 and 7, it's always in short, is you should be looking to sell. But we are at a support, but we could easily move underneath the low of yesterday. Probably somewhere like a 2.5 point, 10 point below bar 75, buyers are waiting to go right back up again. But we might need to sell first to reverse later. So this is now a institutional zone where institutions are trapping each other before they could be adding to their winning positions to sell it a little bit more and then trap and go. Or they're going to trap right here, right now, because you have a higher low, you got a lower low, you got a higher low, you got another higher low. So now is if we start to get 2 bull bars, then you can start to measure and look for a 1R, 2R, or this area hit. Okay. So I need at least 2 bull bars. I don't have it yet. This bar hasn't really closed for me to say that, okay, bulls are buying. But you can see that's the first trap of the bears underneath 13. Bulls bought it. They got trapped because they bought in the wrong place. They should have bought 1 tick above 14. And now they buy again, fix. And the bears who were selling underneath 11 sold higher. They might have fixed. So now if this bar 17 closes with a bull body, it needs to first take out the 16 high. Then you can measure with a stop underneath either 16 or 12, get a 1R, 2R targets to the upside. But that hasn't set up yet. All I know is that this could be just a triangle to sell more. So we don't have that reversal set up yet. The failure of a failure was up here. That's 2 bear bars. You put the stop there. That's 2R. Bear's still trying to reach that 2R. Slightly underneath this level. But it's too low to sell. You're at a support. So if you didn't sell up here, you know, either underneath 3 or underneath 5, underneath 4, underneath 7, it's very difficult to sell here. Like, how much space do you have? You know? I've already taken profits. I just don't want to sell, because the moment I sell, it could also reverse back up. So sometimes you gotta filter things, you know. If you haven't sold here, look where you're selling. Yes, it's still trying to come down here, but is it guaranteed that it's gonna get there? No. We don't have two bull bars here, so there's no reversal. It's a contracting triangle here. It's looking for a breakdown, but it's 50-50, right? Breakout. You're right at the support. It's still bearish. Market wants to test underneath right here. That's the 2R for those sold. At 11, we have some kind of a bill or bond announcement, but we don't need to worry about that. But it could still act as a catalyst to break out from this tight trading range. Here's trying to move under the low of yesterday. Moving average on the hourly is also magnet, which we can move further down to this area on the 5-minute. There's announcement just came out. If the bulls start to close bull bars here and reject and start to take out the high of bar 18, right? We could get 18 bar reversal here. We need to move above bar 18 high with bull closes. Then we can go up to 54.26, 54.30 area, but that is not yet clear. We have a new low now, and you can see that they're still trying to reach this area. 2R Asia, 54.13 or a little bit lower. There's an opening range, bar 1 to bar 6 low. We actually met that measured move target right here, slightly above under the low of yesterday. We haven't really reached my targets, but came very, very close. Don't like that when it happens, but it can happen. So I don't know if I actually did. No, I did actually measured it accurately. So it's just there's here is the bar 6. That's that measured move target. So it's just reached an area. 2 point to 5 point, sometimes 10 point underneath 75 buyers can show up. I don't know how many points here. Let's measure. It's not even 2 points, but they are showing up already, the buyers. But that trend line needs to be broken. So now you have leg 1 pullback, leg 2 pullback, leg 3. So the target is the high of bar 15. And let me see if I think I can remeasure this. This is the new target, but it could also reach the high of 15. Wants to tag these EMA as well. 10 point, 9 point bulls, 54.24. 10 point is 54.25. We might need to go test 54.25, or maybe a couple of ticks under. That's where these bulls will take profits. But we start to get above the EMA is we can reverse. You have a wedge bottom, 1, 2, 3, but it's a very strong reversal. Probably wants to come back and test the midpoint of bar 20, unless we start to close more bull bars above 11 points, which is 54.26. So I want to see bulls actually take some profit here and then get maybe follow through. But you see, we just tagged that. So I would like to see bulls actually get above the EMA, go test either the 14 or the 15 high. There's a wedge here and there's a wedge here. So this is a reversal. This is also lower low, and bulls are trying to get a major trend reversal here. We could reach back up to the 29.75. But I would like to see bars closing above the EMA first. If we fail to close above EMA, we're going to come back and test the midpoint of bar 20. And then I'm going to look for buyers there again. But I did buy as this bar was reversing, and I took some profit here. I'm holding a runner. I want to see more from bulls here. I want to see close above that trend line and then get above the EMA. Yeah, I'm using basically a 5-point stop. I don't do no more than 5 points. I use money stops. So I already did the calculation and said, well, I can buy in this and that will give me that stop. But that's about it. I already scalped, so I'm at a break even with this runner, and I don't care if it doesn't work. And it may not work because we can't come down to the 20 midpoint here. Now, notice bar, that's a 9 point. It's a good place to pay yourself, but bulls want 10 point solid. It's not guaranteed because look what you're buying into. When I see a wedge like this, okay, and if I see a one big bull bar, it's too big, right? So everybody buys that. I think that's a deadly mistake. If I bought down here, I take profit there and I look for a pullback. Then I start to see bull bars, then I'll buy it because that gives me that higher low. Sometimes you get follow through selling. So that's why it was a scalp for me, and this green line was my target. It was also 9 points, so it was a good confluence to take profit. It's still bearish market. Market can still come down to here. But remember, you have a trend line, first break, it can come back down to that trend line retest before finding buyers again. So that's why the 50% of bar 20 is important. You do not want to see bear bars closing below that 50%. If they do, then we're going to make a new low. We're going to take out the 19 low. So I want to see possible retest of the trend line Everybody else starts to sell, and then the bulls start to close bull bars. That's what I want to see. Yeah, I did, because the only time I do that is when I start counting wedge bottoms, like 3 pushes. I see confluence, so I start to enter, because once that bear bar's high is taken out, and I see a good target that it's going to bounce to, and I also point count, because I know how much. Remember I said earlier, 9 to 10 points are going to be in the bag. It's going to be easy to make like 9 to 10 points, like walking in a playground. I said that for like, I don't know, 30 minutes, 45 minutes, maybe an hour ago. So market is making those moves. So I know I can scalp that first swing. First swing is 9, 10 points, but it can fail. Look what we're doing. Look. So that was a scalp for me, not a swing. So I'm out now. My runner is no longer running. It's a roadkill. It just hit the break even plus stop. So I lost no money there, but that's what the stops are for, right? And that's what it's just. I like risk off trades. Once I scalp, if it runs, hey, that's great. I'm in a swing trade. But if I'm in an area that market is still bearish, we're always in short, and we just failed to touch that EMA. I mean, who am I to sit here and hope and think that this is going to reverse, right? So what is the best thing to do if you're in a trade? Have a risk-off trade, right? Runner is there, but it can be sacrificed to the trading gods any second. That's what its role. If it runs, hey, that's great, right? If it doesn't, hey, you can always trade again, another setup. So, for example, this is the last bar, okay, of this wedge bottom. That is the 50% right there. We don't have a bear bar close. They did take me out of this trade, but if we start to close bull bars and then we get above this right there, market is going to go higher. So that's when I can enter again. Now, this is where the wide stops play a great role, right? So how would you do that? Now, you have a trading range here, right? Say you entered your long, and there's a bit of a trading range. What I generally do is to measure, measure the height of that trading range, and then I put stop there. So the way that I measure my wide stop, if there's a trading range and I'm expecting that trading range highs to be tested and get a breakout, I have to have a stop far away because it might still come down. But I can still buy, scale in, and fix it before it continues to go down. That's what the wide stop is. You could put a wide away if you're really thinking that this is going to reverse and go test the 15 or 14 high, maybe even bar 8, okay, is that you don't want to be hit first, right, before it reverses back up. You can also use it as, okay, so it came down. That half R is where I put another buy order to fix it if I think the market is still very bearish and it can hit my wide stop. Then I can fix the position right there, right? So it was like this, right? So it's coming down. I see it, I'm wrong. Maybe I scalped here, but I'm wrong. And my stop is down here. I put a buy order right there. And as market comes down, right, I enter it maybe somewhere here. It comes down, fills that buy order. So from there to there, midpoint is there. As it goes and either gets closer or touches it, I'm out, right? So I fix the trade. I might lose a tick there, or I might lose like a $12.50 there, $25 there. Who cares? You don't want to lose $300, $500, but you do not want this to happen. So that's how I use the half R. Is a great place to put a scale in and then exit out with an average price with a pullback. And then if it's still coming down, you're not in the market to be a roadkill. So those are the things that I measure, and I've practiced it over and over years. So I know those half R's are great for scale in or fix a position or take partial profit or extension of profit taking if it's a 1 hour plus half hour or 2 hour plus half hour, things like that. I'm going to grab a quick water and be right back. We've just tested the trend line, and bears could not close below the midpoint of the last bar made the low. Oh no, they did. I'm sorry, I'm wrong. They actually did. So that's not good. That is not good for the bulls. That bar, 22, should not have closed the bear body like that. So that makes it very difficult now. So I prefer to wait. I'm flat right now. So what do I wait then? Now I want an absolute signal. I want bulls to start closing above this trend line, because when this happens, we can come down and take out the lows. Okay, so I'm going to go get water while I'm flat, and I'll be right back. Okay, so I missed that second entry long is because I just came to my desk. I didn't want to buy because of this bar closed. I didn't also want to sell because I wanted to see another bear bar. But now it's reversing. Okay, so you have a second entry long here, and we're now above this trend line. So now market is trying to reach the high of 1415. Could go up to 7 low. So we are getting that reversal now. Small head and shoulders pattern, inverse head and shoulders. So market will try to get to it might even go up to here. So, but first I'd be interested in that. But I'm a little late buying this. Bulls already got their 10-point plus. They're trying to close is above 11 points. So, and 11 point is 26. They can get a follow through into 54.29, 54.30. We get two bull bars. Bulls can buy the first pullback to the EMA, or they will start to buy above a good buy signal bar, but it could be a little bit early, because you have a trading range here. Might need to come down a little bit, but they're trying to close the second bull bar above the EMA. I think the bar 20 is always in long, already set up as always in long, and it's now trying to officially become always in long. It's trying to reach the 7 low, 29.75. Is first sellers there, maybe one tick lower or at, or even bar 8 low is okay. So many bulls trapped there. They bought lower. They're trying to reach the 7 or 8, bar 7 or 8. But we did reach the 14 high, so some bulls are taking profit there because it is the top of the trading range, small trading range, but there's still room to upside. Now some will buy the close of this bar, but we might need to pull back a little bit. Bulls looking for body gap measured move that's their measured move. They want to reach the 54.30, like I said. It could be 29.75 or 30. That's what we're trying to reach. But possibly sellers around 54.29 to 30 area. So these bulls probably going to take some profit there. And then we might actually pull back to the EMA. Then let's see if there are any buyers there. Because it's a trading range, it's much larger. So what do the bulls are trying to do here? They're trying to close the gap. So they're trying to overlap with bar 8 and close the body gap of bar 9. Can bears resume the trend here is from above selling? Well, they're going to have to show us bars moving underneath the EMA. Okay, as far as I'm concerned, buyers are at the EMA. I like to see that target met and then look for sellers. So here's the first sell, is bears trying to get a second sell. But this right here, possibly the measured move is for bulls, so we could go higher than 54.30. Two bull bars, it's always in long, above the EMA. Seven low, 8 low, 54.30. So far so good. 10 point is 54.29. I'm sorry, 14 average. 15 point swing is 54.30. So it's a good confluence, 54.30. But bears want to move underneath this bear bar. I prefer 54.30 to tagged before we do that. It's only fair. Could even go a little bit higher than 30. It could reach 30.25, 30.50. Sellers above. I opened the attendees can ask questions, the question box. So if you guys want to post your questions, I'd be happy to answer before I go. So we have a bear trend day. The trading range, but it's bear trend from the open. Now we have a pullback. Market could come down, is underneath the EMA, only to go back up again. But then we would get sellers. They can resume the trend further down. That's bull. There should be more actually. So let me see. Oh, I clicked on the wrong. Yeah. So let me do this. Resumption of the bear move could also happen a lot earlier. Okay, so we could go sideways for a while since it's lunchtime, and then around is 1:30 we could get a reversal back down. It could be also around this moving average here. Remember, I said earlier, this is a trading range and the market is oscillating around it. But several times we tried to get a breakout from the highs and it failed. So what the market is trying to do now is trying to go back to the trading range, and that's where we could actually start to swing down. This is a very strong leg down. It probably is looking for a pullback and an area to sell. So we could go there, trap the bulls, and then start to sell. And we could make a new low today if we get a rejection. And that could happen on the 5-minute charts, like this, possibly. Here's another one. See, we go sideways like that. We look like we are bullish, but we're back to EMA. They try to buy with a good buy signal bar right there, but it fails. Cannot go beyond that. So you got a double top, lower high, bear flag, or 1, 2, 3 wedge top, bear flag, and then we move back underneath the EMA once again. All right, a few questions came in. I don't place my orders on the dome. I stopped using Dome a long time ago. It's just a distraction. Something's constantly moving up and down, up and down. It's just distracting me from looking at the bars only. So it was just extra added, work trying to place order. So I just use right click, and I don't have the chart trader open, but let me see if I can open it. So here is chart trader, right? So this is sim. You can then right click, and I use these a lot. Or you can use hotkeys. You can set up hotkeys. And then you can use hotkeys, definitely, which is if it's easier. But I don't use Dome. One question. Al's video is talking about 2 minutes scalp for 2-point scalp targets. If we're sticking with 5-minute chart, what kind of rule we need to follow? For example, can we still use? You can use a 10 EMA, 20 EMA combo. You can still use these 2-point scalping. Well, it's the minimum scalping these days anyways. I mean, look at ATR. It's telling you have a 2.25 there. It easily can be scalped, right? Instead of going for a 1 point or 5 ticks. So rules apply. You want to get closer. If you want to sell, you want to sell as close as possible to the moving averages with a good sell signal bar, such as bar 9 or bar 7. You put a sell stop under bar 7, you never got filled, so they are now back at the EMA, but nothing's clear here. Those two moving averages are overlapping, so it's hard to say if market is reversing bullish. That means you need to see the pink line, which is a 10 EMA, start to move above the 20 EMA, which is the blue line. That didn't happen, so this bar was not enough to drag the EMA higher to turn it bullish. So what do? If your sell stop was underneath 7, then you put it underneath 8. And this bar, if you're not entering with a limit order, it triggers you into the sell order with a sell stop underneath this bull bar. You can grab your 2 points and you can leave a runner. So as we come down, you start to get bull bars. Maybe it's time to exit out because it's trying to snap back to the EMA. Anyone who sold underneath 11 after gapping down so much is trapped now. That's when I do not keep selling. That's where I'd be taking profit. Or I would take profit right there. Since I sold here, from here to here, I have a good reward there. Now, but you know what's happened, right? So everybody else sold underneath 11 and they got trapped. So here is leg 1, leg 2 to the EMA. They're going to sell at the EMA. You sold here, you sell again. In the middle, you break even. It even moved underneath where you sold originally, so you made money with that second sell is at the moving average. So you can use the moving averages as limit sell when the 10 EMA is below. And you can grab those 2 points, but look at ATR. If it's giving you that, that's great. Anything more than 2 point is a runner. So you can make up that. I mean, look, listen, we all strive for more than 2 points. But if the strategy is 2 points, then guarantee that 2 point with the high probability entries. And you can walk away from market with 10 points gained by just scalping. Would you place a stop under bar 19? No, I would not, because it already sold several legs down. And I did say, you're in a trading range, and look at the behavior the market has been doing. Look at here, buyers did buy, right? And went back to snap back to those bull bars and made money. So buyers are scaling it. So what do you think is going to happen the next time when we move underneath that bar? They're going to scale in, or they're going to buy, okay, or they're going to try to prevent the breakout, but they're going to buy. So where are they going to snap back? to the bull bars, like 75, 76 bodies, which it did. Even this one, bar 80, tested it before coming down. So they buy again. Look, they snap back to here. And then now we're not making new lows. If we're not making new lows, what are we making? Small bull flags. So you start to see small bull flags. Hello, it's a bull flag. It's probably trying to make another bull flag and possibly another bull flag and then come down. So it's leg one, pull back leg two. We need the third leg up and then sideways and down. Bears will probably try to resume the trend again. So there's a possibility that, look what's happening there. 10 EMA moved above 20 EMA, but we're going sideways, right? So what do you think is going to happen there? Probably buyers, limit buyers at the EMA. They're already lacing this area. Maybe a couple of ticks above, 1 point above at the EMA, 1 point below. They want to grab the price, make a 2 point, and then see if they can actually have a runner. So, but it's sideways, right? And there's a slight crossover, but that slight crossover with no space between the moving averages, indicating to you that this is a sideways market. But because the 10 EMA officially above 20 EMA, it's a sideways market, but looking for limit buyers and could go up again, bounce again. Unless 10 EMA moves back under the 20 EMA. So you look left. What are you looking for? You're looking for a good place to buy. Criteria is I'm looking for 2 bull bars. I'm not going to buy underneath 27 because the bar before is a bear bar. There's not enough buying power there. But there is here. There's a breakout and that. So even if market pulls back down here, but the 10 EMA stays above 20, everybody else starts to sell. I start to buy. And I'm targeting here. And I'm going to trap those bears. So is 2 bull bars. There's buyers here. The lower third of bar 25, high of 24. How many screens do you use and how are they populated? What size? Oh. Well, I do use a lot of screens here because I got all sorts of browser things open, like Financial Juice, and I have econoday.com. I'm looking at Brooks Encyclopedia. I got another browser for these blog posts. I also have a bunch of other like PDFs open. I look at a PDF where is a collection of S&P slides, charts that I reference back to for common price action. And then I have Discord open, another monitor. I have a bunch of P&L windows with brokers open. I've got a Thinkorswim and a Trading View open, another browser, because those are my backups just in case if anything happens. And then I have one monitor dedicated to you guys here, and then another monitor I use for myself. But I'm getting tired of it, to be honest with you. It's just, and they're not really positioned all that well. They're kind of scattered around. All right, so where's the bull bar? I cannot buy. And the 10 EMA moved underneath 20 EMA, so I cannot buy anything there. And it moved pretty significantly down. So what happened to the limit buyers? They're not there. Anybody who bought above that bar made money, believe it or not. Anybody who bought above there made money. But the problem here is that when you buy above that bar, 10 EMA is below. So you probably bought down here and making money. So now what happened here? Well, if buyers didn't show up, you're not going to buy, right? So if any buyers were here, like I said, what would you need to buy? You would need a bull bar to close. Did it close? Can you buy above it? No. Instead, we closed the bear bar. We took out that limit buy. They observed all of those sell buy orders. Now they're already resuming. They're already resuming the trend. So now we're coming back down here. Market is trying to get below the low of yesterday. That's still target. So that's also criteria. I don't see a bull bar. I'm not buying. This is a really good look. Failure, breakout, failure or failure. So now bears actually started to sell early. That's their 2R and they're taking profit, hence lower wick. But it can continue to come down more, 3R, 4R. So there's no bull bar, you cannot buy. Zones or support resistance or limit buy sell areas can be violated. There was a gap here, bears now closing the gap. So what can happen here? Market we couldn't even get to my 54.30. So we now moved, we're now always in shorts once again. We were always in short. This is just a rally that is engineered by the bears, right? So now this is a bear flag and now market is trying to take out that low. So I bought nothing. I don't like to buy with limit orders, to be honest with you, especially is, I don't see a bull bar closing. So now it's accelerating. So where's it going? It's trying to test the low. It's trying to probably get down to the low of yesterday and under. It's probably trying to come down to here, but they need to take out the 19 low. So instead, as this coming down, I hit sell and I made some money there. So I'm looking for now follow through with the runner. Anybody who's stuck with bar 19 or under 18 made money. They sold higher. Bears resuming the trend. They're trying to come down. More interested in this. 14 is the 2R. Asia, we have not met yet. I want to see a close below low of yesterday. That'll determine the longevity of my runner. If I cannot get that bear close below low of yesterday, I'm going to exit out of this because this could become wedge bottom, higher low, and we could still reverse back up. So I'm still in this, but with a runner. I want low of yesterday to be taken out. I want 19 low to be taken out. I want 54.13 to be taken out. And I want market to continue to come down. There's a measured move target here. I did not short bar 30 because I was talking. I wanted to see if we would get buyers in this area. This was the area I was interested in looking for buyers, but that bull bar never closed, never happened. So after bar 30. So now, and then I saw 10 EMA moved underneath 20 EMA. So now they're selling. So they violated this. So there you have actually a measured move there now, right? So basically that was the measured move. They can come down even further. So you can also measure that right there. And they're taking profit there. Nothing's closing below low of yesterday. Can market reverse here? We could get a one big bull rally here, like a big reversal back up is testing these highs and maybe that high. Yeah, that can happen. Look what happened here. It's been coming down, really bad breakdown, right? And then it reverses. Really bad breakdown, and it takes out that lower high, right? These are lower highs. Takes this one out. So now, but it's not enough though. I like to see one more push, and then we could come down and then reverse back up. So it's not really all that clear. Bears, however, so bears took out this body gap right there, okay, and then right there. So this is more bearish than bullish at the moment. So I'm still holding my runner. I'm not going to give up on that. But if the bulls actually do close this, okay, then they will buy. There's a gap here. As long as this gap is stay open, we could still move underneath the low of yesterday. And I don't have to worry about anything. I also don't need to enter scale in here blindly, because here's the thing. Most of the time people lose their money because they scaling in too early. Okay, some brokers don't even allow no more than one time scaling. This is a new thing, by the way, with some brokers. Others, they don't care, you can scale in, but it could be the death of your account as you keep adding to your losing position. And you don't want to do that. So the best way to add to a losing position, right? Maybe you scalp and your runner is not doing, and when you want to get out of this runner without scratching the trade. So what do? Well, look to see if the gaps are closing. If the gaps are still open, what is the bar looking like? Is it a good rejection bar? That means this bar has to close as low as possible. The next bar is a bear bar. Then you can sell, okay? And not only that, you would break even. You also start to make even more money. It starts to compound. Or if the bulls actually close the gap, like closing a bull body around here, right, like this, then you can make a decision. What are you going to do? Are you going to hold on to this, or are you going to? No. This is where you scratch the trade, because what they're going to do is they're going to buy that with the stop underneath, and then they're going to go for higher. That's where you make a decision. I am not going to be able to fix this. Most likely, this is going to start going up and test the prior highs. I need to exit out because I've got a much more potential making money going long with these bulls that close the gap and now creating bull bars. So those are the things you have to study. That means you have to study the bars and the chart and understand the behavior. Then you can make your decision, okay? Now, this bar closes bearish. Many bears will add another contract. See, I don't have to add anything. It's back to where I was making money with my runner. And when you do this exercise over and over, is scaling in, you start to sit in a losing position without scaling in, and you won't even be experiencing any anxiety because it fixes itself. And then you're like, oh, okay, I didn't have to put in another contract in there and increase the risk. It just fixed itself. All I had to do was sit here and understand the behavior. Since there's a bear gap, close the bull gaps. I'm good. Bear's got a pressure here, and this can come down. Then you get a bear close, then you can invest in, but that right there, because price is below your break even, okay, or your entry, now you adding another contract, broker is gonna mark that as, oh, he or she is actually adding to the winner, not to the loser. So in their eyes, you're actually a lot more profitable if you're working with prop firms. If you're working for yourself, then you can just pat yourself because you're your own broker, basically. So so you have a bear bar here, right? It's not the best, but it created a bear triangle there. It's an inside bar, but it's closer to the lows. There are sell orders underneath bar 32. Triangles are flags. But in that, it goes up, down, until it finds a place to break out. See, I don't like what's going on here, but it's possibly a flag. I didn't add anything with bar 32. I didn't scale in to fix. It fixed itself. But obviously, I don't want this. I want market to move underneath 32 because there's sell-stop orders underneath 32. And now I want it to actually give me a lot more than what I bargained for. So that means this bar needs to keep moving down. If it fails, then market is saying something. Look, they did sell, but we're not able to come down. So now we're closing a bull bar. Then maybe I need to take that hint. If the bar is really a strong bull close, that could be II from the lows, and that's where I need to exit out of the short. Market will show me that if the pressure, bear pressure, is waning, diminishing, I need to read the bars. So far, I don't need to do anything other than just sitting here and looking pretty and waiting for market to move underneath low of yesterday. But anything can fail. If they do close a bull bar, I'm not going to linger. This time I'm going to take the cue and I'm going to exit out because it's also II. Measured moves, there's so many different ways to measure. I would recommend you to go back to the course and study the videos, and then go and read the books, chapters. But really, I look for follow-through selling, follow-through buying, and then I look for good signal bars. I look for structural breakouts, like I have a lower high here, right? And if the bulls start to close above with good bars, right, and getting follow-through buying, I will measure this and then project it up and look for that measured move. There's a bar gapping measured move. Look at here. There is, for example, this gap is closed, right? You can also have that measured move. There's a measured move of opening range, which is first 6 bars, first 30 minutes. You can find that, which is marked. We reached that this morning before reversing back up. There's a measured move of legs. Here's a leg 1, pullback, leg 2, right? So there's that. So many different, but if you study them, there's a measured move of entire day or half the day. I also measure trading ranges. Breakout of the trading ranges can give you good one-time projected targets, whatever the trading range height is. All right, so still no close. There's 13 seconds left. Buyers are above, inside bar 32, but now they're probably moved their buy orders above 33. I don't know if I'm interested in buying anything here. But it is II, so it can actually reverse right here. Considering 33 actually is closed above its midpoint, mid-range, there are probably now buy orders above 33. But it's also flag. Triangles are flags, so bears want to get another push down. So if you do utilize the stop orders, you do not need to worry about when market takes out the 31 low. You can cancel it out if you're flat and looking to buy. Right? If you are a bear and you're worried, then just put your stop there, tighten it. In case market does not continue down and starts to move up, you can exit out the position as it reverses back up. So to me, that's a stop placement, not a buy, because triangle is a breakout mode, and the market is trying to get a bear flag there. Like here, I can measure from here. That is the measured move. We reached that. We could continue even down if you wanted to. There you go. Oh, I'm making a great amount of money here. Now I want to see a little bit more. We reached the 2R Asia, which was 54.14. Bulls failed to fade this up, so therefore became a bear flag. So you could have also sold underneath 33, or just leave it underneath 31. You get filled and you would make money. So now, can we close a bear bar below low of yesterday? We do that, yes, then we continue down. We're going to move underneath 54.13. So they're already resuming the trend, but I would be careful about bar 40 and bar 48.50 today. Okay, so this selling can get follow through into the magnet here. This is the 1 hour EMA, which is right here. That is around 05. Yeah, this one is exactly the same area, just give or take. But I need a bear body close. There's a wedge here. Now, 1, 2, 3. And then another one, 1, 2, and 3. Not all that symmetric, but it's there. So if bears want to continue this, they need to close a bear bar below low of yesterday. If we start to get bull bars, then there's a failure, okay? And then we could reverse, but I'm not interested in. I think the market could continue to sell into bar 40 minimum. So this is bar 34. The end of, we got 2 more bars for the new hour to begin. So I'm not interested in buying anything here. I think the market is trying to get this target, and at least I'm not going to do anything before bar 40. I think it's still trying to come down. We do have a bar close below low of yesterday. Good for the bears. But we need consecutive bars. I did say we were going to test the low of yesterday, if we cannot go up on the daily chart, and we simply did that. I like to see bears actually close the gap to the EMA on the hourly. I don't think anybody is after me today. Let me see. Right. Yep. So no one is scheduled after me. Tomorrow I come in the morning and the Brad Wolf comes in the afternoon. So I'm looking for follow through here. I'm still short, Mike. And no, Elaine, I didn't sell bar 30. I actually sold 31. I'm looking for follow through. The next target is 54.11 or 54.1050 or at best 950. No, we're making lower lows and lower highs, lower lows and lower highs. So the market is in a bear trend at the moment. They had a chance of reversing it due to trading range, but right now they're selling, so I'm selling with them. So the reason why I thought the market could come down more and the bears could resume, because of this. Bears are doing okay, but look at this, strong bear bar and a bull bar. Then it sells, but look at the bars with wicks. So it's not all that great. Then you get a bull bar, and then you get this beautiful bar, but what's up with that? I mean, it should be getting sell the close, sell the close. Instead, it gets this. So what do you think is happening here? This is where the bears are not very happy. So they allow bulls to rally, but that is actually fueled by the bears themselves to trick the bulls into buying, okay, only to resume the trend later. So how far can it go? See, we reached my other target, which was 54.13. Now I want more out of this. I actually would like to see 54.11, 54.1050, 54.950 tested before we bounce. So I need a bear close here for follow throughs because my target is this right here, 950, 975. 950 is 10 points, so I'm just one tick above it. So also, why did this happen? Well, I did say there's a Fed member scheduled to speak around noon. And then we have a 1 o'clock, okay, which is a major 30-year, I think it's a bond auction. I forgot. Yep, it's a 30-year bond auction at 1 o'clock. Things are going to go like really crazy on you. So I would be careful at 1 p.m. Don't be in the trade. Just wait for it to give you direction after 10 minutes. Okay, so 10 after 1 or quarter after 1, you should be taking your trade or opening a trade. Otherwise, this is still selling. I want follow through selling. I want this now. I want 5405. 5405 is the EMA on the hourly chart. But we don't have a bear close yet, so, but we should get it. I mean, bears did a fantastic job here. Even if we pull back, they're probably going to sell. So remember, I said before bar 40, I'm not interested in buying anything. So I'm looking for a little bit more here. At least like around here. Market can sell into 53.94. Woohoo! We'll be rich. Today we can actually sell a lot more. Like I'm gonna mark 95 now. Like here, no. Yeah, right there. We could actually sell into this. Really beautiful. Well, it didn't really tag it yet. It's a one tick short. But it should reach there. There shouldn't be a problem. Well, because the question here is why is bar 33 not a signal for MTR? You know, MTR for bulls is, well, I thought maybe we were going to get this, but then I got irritated with this gap not closing, right? Gap stayed open. So here's your first sell and a second sell. Yay. So they're selling. They're swinging this down. Similar thing is happening here. Bears are maintaining the gaps, right? So they're selling. Beautiful sell signal. You can put a sell stop under 32. And since it's the exact identical bottom with 33, you're going to sell underneath 32 as earliest, or you could just leave it underneath 31 since it's the gap bar. So there's no reversal here. They failed. And I noticed that, I noticed that there's no bull bar here. No one's buying at the EMA. I was looking for a good buy signal bar to buy and then buy again. That did not happen. So I have to take the cue. I have to take the clues and say that, nope, this leg right here, it's leg 1 pullback, leg 2 pullback, small leg 3, is owned by the bears who aren't happy with the quality of breakdowns, okay, or breakdown bars or the legs. So that means they're making the market, bear institutions are investing into this to get everybody in and making it look like it's an inverse head and shoulders, but it failed. So you got a cup and handle, totally failed. So now what do you have? When a cup and handle fails, what happens? You get a measured move. You can even measure that and project it down. Excellent. So that's 2R right there, which we reached. You can also measure from here. That's where it's trying to come down to. Or you can also measure from this low. Man, that doesn't look all that great, but whatever. I'll just take this. That's your measured move. Okay, so I am done with my session, everybody. But here's the thing. I think I'm going to stay longer and because I've lost some time, about hour and a half or so, I'm just going to hang around, okay? I was going to take some of Brad's time since he came in yesterday, and but I don't want to, ruin his momentum. So I think I'm going to compensate the time since nobody's scheduled after me today. So I'll just stick around another hour and a half, okay? Okay. Well, I sure don't like that bar, so I just took profit. Plus it was 11 points down. So we not only tested 950, I've taken profit there, one tick above 975, like I said I would. And then now it came down one more point and tested 850 and reversed back up. I'm glad I took that profit. Now we have an outside up bar, but it's not official, and it actually needs to close this way. Now I want to check something. It's probably from there. How many points did they? Oh yeah, that's within actually 2 to 10 points, so it's almost 8 points. Okay, so buyers started to come in, but I need to see this bar close outside up. But remember, this is how many legs here? 1 pullback, 2 pullback, 3, 35 could be pullback, and the final leg. It's trying to go back up to 33 high or the open of 34. I didn't buy anything. I was just telling team that I'm going to stay a little longer. So I missed. Now, sometimes this is what I do. If market went 10 points, I look for about 3 to 5 points pullback, and I buy and hold it until 14, 15 points. Then I look for a 10-point move down. Okay, so I do that. So market came down, right? 10 points and then what happened there? It came down a lot more than that, but here, this was 5. I think it's a lot more than 10 points. So here is 12, but I'm counting from here. So it's actually 20. Normally I buy there, but I was too busy typing message, so I completely missed it. So when market goes, say, came down 10 points, bounced, sold again, came down again, right? That's about 14, 15. It's trying to get to the 20 point. Sometimes it pulls back about 5 points. Everybody thinks that it's reversing. It's not. It's going to come right back down. This is what just happened here. Then you can just buy. What are you looking for? You're looking for a 10 point. Probably wants to consolidate a little bit before going back up. Okay. So did we get a 10 point there? Yes. Now we got 950, but it's within the vicinity. So, but we could get a follow through buying here. $5,400 is the round number. Market wants to possibly come down and test it. I'll be more interested in bulls if we can actually get above the EMA. This is still not bar 40. I have not bought anything. It's a one big bar. Have a break of the trend line. So I want to see another bull bar. It's if you buy one tick above the 37, you're basically expecting market to get the EMA and get above the EMA and test the 33 high or the open of 34, like I said earlier. So you sit there and wait with a buy stop order. You don't buy the close. Otherwise, similar thing can happen, like happened with bar 20 and 21. Market needs to show me, especially we haven't really printed the bar 40. This is the new hour, and we're so close to the moving average, and we haven't really tagged it. So I'm not really all that excited, but it is an outside up bar. It is very strong, and it wants to get another leg or two, but they have to show me. When we have a little bit of room to the moving average, I hesitate buying. Okay, higher time frame moving average. So to me, let me get this out of the way. To me, bulls need to show me good pressure. Bar 37 is a good one, but okay, so they just activated the buy stop orders, so they're now looking to go test the EMA or the 33 high, 34 high. So the only way that I would buy this, one tick above 37, which I entered, but in order for me to add to the long, I need to see bulls actually close above EMA. So to me, this is a scalp at the EMA. And if I cannot scalp anything, that will prove to me that I was wrong to enter this long. There was probably a scalp there. So if you entered 1825, 1950 would have been your scalp. Look, market just tested 1950. There was a 5-tick, perfect 4-tick, 1 point extra 1 tick to cover your commissions. 5-tick trade there. But is that enough? No. I mean, who's going to go when the ATR is 575, 5.75? Nobody cares to make a 1 point. Everybody wants to make at least 2 points. So everybody who bought 1 tick above 37, unfortunately, the risk is too big. They want 2 points, so they want the EMA test. But everybody who thinks that, okay, we're entering with a really terrible risk reward here, maybe we should get that 1 point because the risk is so far away. Risk is big because the stop is so far away. You end up getting this bar. Why? Because a lot of the machines actually grab that 1 point in case this actually reverses back down. So you have to make that decision. Look what you're buying into. But a bar like this should get another leg up. So in a situation like this, I don't have a stop down here. I have a money stop, which is a 5 point from where I entered. I only use 5 point stop. So somewhere in the middle of this big risky bar, that's where my stop is. Okay, I take that 1 point. If things go against me, I can quickly exit out before it hits my stop. Okay, then I could say this was a scalp, not a swing. So here they're still trying to get that 2 points, so that means it needs to reach 2050, right? 2025, 2050. But best way to enter, I think, is just to wait for market to really show you that it has reversed. That means it's actually closing bull bars above the EMA. Then you can look for a pullback and a good buy signal bar in the form of like 24 or 23, but think of 23 above the EMA. So it's like this, most of bull body above the EMA that you can buy 1 tick above or close or pullback, whatever. We're struggling here because we have not closed that gap to the EMA on the higher time frame. So it can pull back like the 50% of bar 37 before going back up. Risky bars, you have to make a decision whether you want to, if you have a big account, you can hold it, but if you have a small account, you really have to scalp. You know, you don't want to enter a trade and not make any money. That, I think, it's, to me, that's stupid. Like, why would you enter a trade if you're not going to make any money? What's the benefit of opening that trade? You can't be a swing trader all the time. Look at S&P. It's like, it's prone to reverse. Look at this. How can you swing this, right? You have to look for a good pullback. So how come the bears are not continuing to sell this? I wanted to get more out of this, but why aren't they coming down? Well, I can't dictate the market. I just trade what's in front of me. Outside up bar probably wants to get follow through buying. So it probably wants to test the 33 high. A decent bar like 37 is buyers above, even though there's not much room, but they still buy an expected scalp at the EMA. So 2050 is their target, 2025, 2050 scalp target. Here's what the market can do today. It can actually move above the EMA and then sell once again. I want you guys to notice something. I'm going to delete everything so you can see it, right? And I'm going to delete this. I want you to notice something here. Moving averages are parallel to one another. But because the 20 EMA is above the 1 hour EMA on the 5-minute chart, we're more bullish than bearish, not all that bearish. Yes, we are moving underneath the EMA. That puts us always in short, so you should be looking to sell strong bear closes. But what about the strong bull closes underneath the EMA? Right? That means that's a reversal back to the EMA, possibly above the EMA. Then you look for double tops, okay? When the EMAs are parallel, it can have a significant amount of room in between. That means the pullbacks are going to be large. So that means you can get 2 or 3 times of the ATR. So that was a 10 point, so now you're getting a 15 point, right? I don't know if it's actually 15 already. No, that's just 11. So we need another bull bar closing right around there, 1175. Then it will go to the 15, 14, average 14, 15 point area. So I'll mark the 14. So market actually could reach there. It could even get 20 point out of this, but probably it's going to want to make another lower high, okay, because we made a lower low, and then reverse back down. Some think of this as a major trend reversal, okay, but we still have to make the higher low. So I'm going to still assume bears are going to try to sell above the EMA. So 13, we haven't even touched, did we touch the 13? Oh yeah, we did. So they did touch the 13. These take profit swing zones are 2-point zones. Okay, so middle is 10. That's 9. That's 11. It could go there and come down, or it could go there and come down. Okay, and the next one is middle. The 15-point swing is the highest. Average 14, middle, and 13. So this time we just test the 13, and we're coming down, but we could still go up. If we close above 15 bull bars, then expect 20 point, which starts at 19, 20 middle, 21 tops. So I see something like this, and they're selling. They're selling the pullbacks to EMA. Even above the EMA, they're selling. You're going to have to take profit quickly, scalp. So anybody who bought above 37 expected EMA test and above, which I said that they're probably going to do. I said 2050, right? That was 1950 was 5 points. I'm sorry, 5 ticks. So it's a 1-point scalp. They're probably going to try to get 2 points out of this. So that was 2050. They got a little bit more than that. They got even 2150. But who cares? You're going for a 2-point. And then it comes down quickly. It happens to be around where the next swing target zone. I did say we're probably going to test the 33 high, which we did. They're trying to get a double top, so that's your first sell. After we make a new low, that's first sell. We're probably going to go back up again, and they will try to get a second sell. If the second sell fails, then you can look to buy. Machines know. I think even they talked about this during this Orlando event, which I'm very happy about because I've been told that I'm delusional. I am not, but whatever. Call me delusional. It works for me, and I don't know. There are hedge funds trade this way, so it's, we're delusional together. Anywho, it's just machines. This is manipulation within the S&P market. They know. They count. Exactly. So it worked. I mean, it's been working for me for years, so I'm not going to change it. So 13 I was a little bit late to market, but I did say it's probably trying to get to the 15-point swing zone. The bottom of it is literally at 13. So, and we just tagged it, and it just rejected. Why? Because look at this impulsive selling with 3 bear bars, all of them closing very decent, including 35, considered it's a doji. That body closed below its midpoint. So that makes it a strong bar, even though it looks like a doji. Okay, because if you actually find its midpoint, look where the body closed, below its midpoint on the lower third. That to me is sell bar. You can sell underneath that bar. So what does that mean? What am I trying to say here? You got minimum 3 bars, consecutive bars. When price reaches that bar 33, sellers are there. So you can find a zone, then measure it, and see where you can take profit before getting trapped. Because you're trading either with the machines or against the machines. Even when you're trading with the machines, remember the 80%, 90% of the market apparently is made up by the machines, right? So even when you say, or when I say, yeah, we're trading with the machines, no, we're not trading with the machines. We're actually still trading against them. How? We're trying to take profit before they start to take profit. So we're trying to get filled faster than them, but we never do, right? So think about that for a minute. So that's why measuring helps me a lot, that instead of trying to get paid at the 14 or 15 point, I'm going to get paid at the 13 or maybe even 1 tick below, 12.75. That's it. Because I know every machine is sitting at the 13, 14, 15 level. If I get paid 1 tick before them, that makes me a better trader or responsible. Anyway, so we might need to come down one more time if this is a flag. I would like to see 1, 2, and 3, and then go up. I did say this is the first sell, so they will fade it. But in order to reverse back up, I would prefer another low. Okay, bar 40. Remember I said if I'm going to buy, it's going to be a scalp before bar 40. If I'm going to swing, it's going to be after bar 40. So here is bar 40 and 41. Now we have a chance. We have a gap here open. Bull's trying to get the second leg up, but we're still not above the EMA. I still want market to get above the EMA. As far as I'm concerned, we could get a second sell even if we go higher. So I need to see bulls actually do close above the EMA. Market has been selling at the EMA, test of the EMA. They can still sell. We have not successfully taken out this high or that yet. They're trying to get the second leg up, leg 1 pullback, leg 2. We get 2 bull bars above EMA closing, then that's good news. We can go right back to the 54.30, which we failed to test, remember? So any bulls who actually bought and they saw bull bars like this, measured it, but they couldn't get their target, which they couldn't. It was a couple of ticks failure. They buy lower again. They're trying to get to the 54.30. Market is trying to get above the low of yesterday, but if we do not get those good closes and we start to close more bear bars, we will come down and test the 1 hour EMA. Because every time the bulls put a gap bar, bears closed it and sold. So how is this any different than is here and here? Here. We're making lower highs and lower lows. 1 bar above EMA, okay, but we need 2. It is a flag. It's the form of expanding triangle with an apex. If bears start to close, we're going to come down and test here. That's why I said I might need that third push down before I look to buy. So I didn't buy anything here. So I was long here. I took profit, but that's about it. And that was a long time ago. I got out a long time, like 3 bars ago. 2 bars ago. Yes, news in actually now 3.5 minutes. So can the bulls do show up here? Yeah, if they do, we can reach these highs. Is my actually interested area would be here, but there are sellers there. Apparently I deleted it. Okay, resistance it is. For bulls, this is where they want to go and test. Somewhere in that area. I'd even yeah, that would be the target for them. So catalyst is the news at 1 p.m. I'm waiting for that. If we close a bull bar here, then we're gonna go. We could go test right here and the projected target right there. It would be like this. It would be like this. Target 1. Wait. Hello. And possible projected target. But it would be better if the bar 42 actually closes bullish. That would be 2 consecutive bull bars above the EMA. Then we can get the buyers. They would close this gap right here. Closing the gap means we go higher. But if suddenly this bar closes bearish, we start to move underneath the EMA. We're going to come down here. So it's very critical area. I would not take a trade here. If you're in a trade, exit out now. You have about 12 seconds. It can trap you really badly if you're long. Are there? So leg 1, leg 2, pull back. Might be in leg 3 here. This is too risky for me. Technically, that is your leg 3. We went above the prior bar high. We went below and above. Sellers might be above bar 31 or bar 30 open. Or we're just going to close the gap and buzz through it, but I need to see the bar close bullish. You can also do this. Yeah, I think that's better representation. Here we go. That's the trend line. Okay, so this is news related. It could have also gone the other way. So now they're trying to reach the target. Okay, that's fine by me. So we just tested the bar at 31 high. I did say there are probably sellers there. They're trying to sell, but the bar closes bullish. We can continue to go higher. That's still the target. And there's possibly projected target, but I'm not worried about the projectile. This is what I want it to be tagged at this point. But in order to do that, we need to close this bar above its high, on its high and above the 31 high. $20-point bulls starting at 19.2750 and goes to 28.50. Is 28.50 is literally one tick below the target line, and that's where I am. So I entered long. So I want to scalp that. I don't know if we're going to get there. So half a minute left for bulls to close a strong bull body here. Buyers probably want to go above 43. They are looking for 19 to 20 point scalp here. That is 28.75 is the 20 point. Market makers, they're trying to get above 27 high. Bar 27. But we can't close above close of yesterday. And the upper wick on 43, remember this is the third leg. As I'm counting, this is leg 1, pull back 40. Then leg 2 goes above bar 40, so that's your leg 2. Then this comes down, right? 48 is pull back and leg 3. So we're in leg 3 here. So you either enter down below and you're getting ready to take profit, or already have scalp, is hence the bar 43 upper wick, and you're in your runner and you're going towards that target. So we can reach there, we can reach higher before coming down. So I'm gonna see if we can get that 28, 25, 28, 50. Could go higher, but struggling. I'm looking for follow through for bulls. That close of yesterday is really pesky. Come on, bulls, you can do it. Right there. But we can't get above that close of yesterday, which is really a bummer. Can we just reach that target, please? I got a 20 point there, y'all. I got my target 28.50. I don't know how you guys doing over there, but I got paid, just so you know. I'm going to go feed Apple because this poor cat has been patiently waiting. Now that I'm collected here, decent amount, and move my stop to way above break even plus, I'm going to go feed that poor cat, and I'll be right back, okay, for another half hour. Okay. Well, we failed to test there, but it isn't the end of the world. it could still go up, but it is a 20 point, so I'm taking profit there, but it can't continue to go up. This is the projected target, but first we have to test this and then get above it with a bull close in order to go up the projected target area. So it's not that easy because machines know that 20 point is a good swing and they must take profit. So just looking for, but this is a valid target. We should at least test that. I'm trying to measure, I don't know, was it 20 or was it 1975? I thought it was 20. Yeah, that's it, 20. Sure, I don't know, was it 20 or was it 1975? I thought it was 20. Yeah, that's it, 20. From the low of 37. Inside bar at the top of a trading range, but you'll be selling against a tight bull channel. It's micro bull channel 43, 44, 45. But there are sell orders underneath bar 36, 46. So I don't know if I want to sell. I'm not interested in selling, but it can get a 5 points down. So there's a 5 point, it can come down. And if it closes a bear bar, it could go even further more, like 9 points, 10 points, but bulls seem to want to get up here, so I think the bears will have a hard time starting a new trend to downside. So it could be just a deeper pullback. Okay, we reached the target, but it can still continue to go up if we close a bull bar, especially if above this line, green line. The sell zone is here. Really good move by bulls, and if they want, they can continue to take this higher. So now, but I still would need that bull body. I would look to see, I mean, we can actually get above bar 8 high. That means we could actually reach the projected target. So this is still going up. I'm still in long. I'm still holding my runner, just trailing my stop. Closer and closer. Beautiful. Really is beautiful. I'm glad I stayed longer. I think by the time that this bar closes, this chart is going to look like it's touching these bars low, and then it's going to be suddenly like, okay, we actually did touch the EMA. Sometimes it happens. It also happens on 5-minute chart as well. So it's a bit of a parabolic, but it's a small pullback bull trend. It's trying to reach the bar 8 close or highs. Projected target is a valid target. We could accelerate and reach there if we wanted to. So that means if we cannot find any sellers here, then market is trying to reach bar 2. Okay, and we could certainly reach there as well. But it's a sell zone. Selling was strong there. In fact, the bears made new lows. So they're looking for rejection candles, but there is no sell signal. You shouldn't be exiting out of your long. Now that we closed above the first target, bulls can certainly continue to go up. So I'm going to look to see if there's any breach over bar 48. There are probably buy orders above bar 48, even though it gapped up, but bulls are looking for acceleration. If we fail to take out the 48 high, then we come back down to the EMA with maybe like a 2 legs or something, but I don't want to see a bear bar. It is in a form of a rejection bar, but still a bull close. I mean, either take profit here, minimize the risk, and make some money, or bulls can still push this higher. We are already several legs up, so trying to scale in or trying to buy here could be very dangerous. You should be taking profits, not entering long. You were long either down here or above 41 or with 43 or at the EMA, but if you're entering here, you could be buying into a profit taking, which is dangerous. So, but I'm still waiting for this bar to, fake out the sellers. It doesn't look like he wants to, but we don't know. There's still 2 minutes and 52 seconds here. Bulls can still accelerate up. Bears looking for a sell signal bar. 48 is not a good sell signal bar to begin with. So it's not a good, hey, let's sell this and swing down. No. You need a really good proper signal bar in the form of bear bar. So the 49 is a really good bar for bears. Many bears will exit a couple of points from under that bar if they cannot find, many bulls will exit from underneath 49, a couple of points, maybe a 1 point, couple of points if we get another bear bar especially. But this is still, it's the first break of the trend line, okay, but it is a decent bar. Most likely it's going to get a follow-through selling. It could be the sign of a profit taken. So I did exit because I didn't want to give back more. I'll buy again if the bulls actually do get above this line right here, okay? But at the moment I am flat. There will be probably a 5-point, 3 to 5 point move down. Here is 3. Why 3? It could be 325 because there's enough in there, ATR, that it could give you 325, 350. I'm looking for 5 point instead. 5 right there. Could go 1 tick under. If you measure from there, if you measure from here, you already reached your 5 point, 525. And bears want to bring it down to minimum 9 point and average 10 point. So depending on where you measure, it's very close, right? So here we go. Looks like that's where market is trying to go. I am done with my session since I just want to put in another hour and a half. I need to get some lunch and take a break a little bit and then come back and see if I can trade the end of the day, but the webinar will be ending now. So if I'll take a couple more questions through GoToWebinar. I just opened the question box again. I'd be happy to answer just a few and then I'll leave. Tomorrow is is Friday. So it'll be me in the morning, and then Brad Wolf will come in and close the week for us. Sure, no problem. Yeah, I'm glad I stayed too. It was good. I really didn't want to, I didn't want bar 37 to go to waste. So it was very difficult to get down to the 1 hour EMA. And you get a bar like this, you know, it's going to try to go up at least 2 EMA. It's okay to buy above it. There's not much of a room, but still, I did scalp and it came down. The bears couldn't close this gap. Right there, you can actually buy above 41 if you wanted to, even though you don't have 2 consecutive bull bars above the EMA, but it is, I think, always in long already. So then you get followed through a couple of legs up and another gap here, which is good for the bulls, but some profit taking. I don't know if we're going to come all the way down here. We might. I did not sell this at all. I actually did take profit though, just in case, because I didn't want to sit in a 10.9 point move down when measured from the high of 48 or 5-point move from the low of 48. So, but bulls can still buy and get us up to here if they wanted to. It's just that, look, the first break of the trend line is bears are not getting followed through. So what could happen is that we could go up and test the high and then get a second entry short if bears want to sell. Then bar 50 low would be your neckline. But the problem here is with bar 50, we could get 6 bars up, 12 bars, 16 bars up. We can make a new high today. Okay? So especially if the bulls are still going for this projected line, and we take out the bar 48 high, that means I will be counting 1, 2, 3, 4, 5, 6 bars to here. That's average, minimum. And if we get above this trend line, then look for additional 6 more bars. So 12 to 16 bars average. And we could actually get 24 bars, okay, 2 hours of going up. I don't know if we're going to get that. But at this point, since this is bar 50 and bar 48 is 130, we could get another leg up. Only if we take out the 48 high. So then 6 bars approximately reaches that projected target line. And that is the second target line that I had on the chart. So basically, selling underneath 49 is your first rejection, but the rejection bar 48 wasn't all that great. 49 is okay, yeah, we can sell, but you're going to be greeted with buy orders, okay? Pull back to a key price level. If you want to swing this down from this level, okay, 2 things you're going to look for. First, bulls to test the prior high and fail to make a new high. And then you're going to look for second item, a strong sell signal bar, okay, closing on its low. That'll be your second entry short anyway. But as is, it doesn't look like it wants to swing short. So you have to look for that first, because the moment we make a new high, we're going to accelerate into here. So, well, I'm glad you enjoyed it, Bara. Probably butchered your name there, but excuse me. Yeah, glad you enjoyed it. Hope you learned something. We all add, our spin on what we learned from Al Brooks, how we measure. Some of us are much better, people measure better than me. I'm a lot more conservative when it comes to measuring things because I like to take profit early. But some of us, we can measure, put on the chart. Really good, some of the team members are been doing this for years, so each one of us add value, I believe. So you can learn from all of us eventually. So keep joining the streams. Every single one of us will teach you something. Okay. The question, I'm new here. Is it normal? Is normal not have instructors some afternoons? Well, we never promise a 9 to 4, full day, but we do have full day. So since you're here, let me show you so here is the schedule, right? So here's the schedule, and you can see that we have some days half, some days full, okay? And we have entire month, so you don't get a day off if it's not a holiday. No, we don't do all the time full days. We try, but we can't. It's just, it's tiring. So hopefully this is good enough. Is there a chance to an index of the best of rows? I keep going back and trying to find some of your explanations, and I'm having trouble. We don't have such an index, best of rows. It's really best of L. We're basically echoing is what L teaches. I would refer back to L's content, whether it's course or it's videos. I mean, even free, there are a ton of L Brooks free presentations online that you can, on the YouTube Brooks Price Action YouTube channel, you can watch if you don't have access to course or the books. Best of rows is, I think, the best thing you can do there. Purchase some of the old webinars, recorded webinars. We sell them monthly packages, sometimes quarterly packages with a very deep discounted rates. You just have to go to brookspriceaction.com, log in, go to the subscription tab, and then it's all listed there. But if you really want to learn, just scratch me, just go and purchase L Brooks's old recorded sessions. That's what I would recommend you to do. And then you can come back and starting from, I think it was like June 18 or July, I think it was June 18, was it July 18? I can remember. 2022, that's when I started here. But before then, it's all strictly L Brooks. That's what I would do if I were you. Okay. If you want to see how I enter trades, how I add is scaling, or scaling to fix something, I made a ton of videos. You can find them on my Discord. You can just go there, just click on here, right click. You can click on this one. I believe this works. If this link doesn't work, let me know. Sometimes it expires. And okay, and then go to here. It's here. This is it. This right here. Ton of videos here. This is where I'm actually literally taking trades. Some days I actually did trade and record it. Some days is replay, so I'm trading the replay and what I have taken in the live session. But it's in the description, so you can tell which videos are actual live trades, which videos are examples of the trades that I have taken within the replay. I like to make that statement so that people understand that not all videos are actual live trades. They're educational purposes anyway, so, and they're not open to YouTube. I don't like to put stuff on YouTube. I don't care to make a name for myself. In fact, I don't even want to. So it's exclusively to the Discord members. So I only list them on the Discord. Okay, so you can get it from there and watch and learn the mechanics of entering a trade. That's where I'm literally counting, showing how I count, where the scalps, where the swing targets, how I'm entering, how I'm fixing. And I'm actually typing on the charts as well. I don't talk. So I constantly type on the chart so you actually see the reasoning behind why I entered a trade. So you can just, watch it and learn from there. Doesn't work. Link doesn't work. What the heck? Why does it expire? I don't understand why it expires. Okay. I'll just replace that link with something new. It says expire never. I hit never and I generate it, but it doesn't seem to. I think it's a Discord thing. I don't know why. Okay. Okay, I just replaced it with the new invite. It should work. All right. You all have a great day. I don't like, there's an inside bar here, so we did not make a new high, but it's also not good enough to sell. Bar is 52, but it's top of this trading range, so it seems okay, but I need to see another bear bar. So I don't really like this one. Not a good second sell. So the bulls are still trying to make their way up to the projected target. Since we are in a trading range now, open of the day becomes magnet. Like I said, we could actually reach the open of the day. We might even make a new high. If we actually get above the open of the day, we could go to high of yesterday, but we got a lot of work to do there. First, we have to reach this target. Then the next one is going to be the high of 1 or open of the day. We start to get above it, then look for high of yesterday to be violated.